Hi there, welcome to Grain TV. It's Tuesday, March 29th, 2 days away from USDA's planting intentions report. But today we had an update in grains fueled by beans getting above 926 in November and 914 in front month May. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was up 2.5 cents, closing at 373. Beans up 7, and wheat gaining a respectable 5 3/4 after yesterday's advances as well. News today was pretty light. We pretty much saw a lot of news in the world markets, basically talking about Fed Chairman Yellen, who was saying that she's more dovish than hawkish at this juncture in regards to Federal Reserve policy, and that we need to be watching global situations much more closely before we decide on interest rate changes. That sent the US dollar sharply lower. In other outside market news, crude oil continues to come under pressure, falling $1 a barrel and waiting for API's weekly crude report that will come out later this afternoon. In other news, some of the weather forecasters are starting to turn their attention to what we might expect this coming growing season. And a lot of forecasters have been talking about the likelihood of higher than normal temperatures for the Midwest, but we haven't seen much in the way of precipitation today. We saw NOAA's forecast for July showing at least one weather model that shows a pretty dry Midwest, and this is the map in red here showing the heart of the Corn Belt and into the plains. Expected to see, at least according to this weather model, expecting to see a fairly dry July pattern. That in conjunction with temperatures that are expected to be warmer than normal, which is in concert with what El Nino forecasters have been saying as we come out of El Nino and into a La Nina by probably late fall or early fall, that we would see warmer temperatures this summer. But the fact that it potentially could be dry might be a catalyst for weather rallies in this coming summer. However, before we get there, we've got Thursday's USDA planting intentions report, and that is really what the market's going to focus on Thursday. And in the meantime, we're going to be kind of marking time, if you will, until we get to that report. Looking ahead to what analysts are expecting, they look for a fairly big jump in corn acres. This is the one that we heard from USDA in their Ag Outlook Forum in February. Most analysts are on par with that 90 million acre corn number, up from 88 million last year. The range of estimates is fairly tight. Most people are looking for at least a 1 million acre increase, if not even more than that, up to 3 million acre increase over last year. Beans, here's where we're sort of all over the board. We're a million off of last year versus 1.5 million higher from last year. And wheat, most people are looking for about a 3 million acre increase. And of course, in January, we got the winter wheat plantings report that showed a significant drop in that segment of the wheat market. Today, we had a good rally in beans, getting up and above that 926 mark that we have been talking about in November new crop beans. We cleared it at the end of the trade session and were able to hold it all the way into close. If we look broader and longer term, that's the highest price we've been since December. That's when we last touched that 926 mark. From there, our next sort of overhead resistance is around that 940 mark, but that's going to be a lot harder to get to than the 926 mark that took us 3 weeks. I suspect we're going to really pay attention to what happens on Thursday with not only planting intentions but also quarterly stocks. So the trade will be watching those numbers quite readily. We have had a sharp rally up here, especially in beans. Will this market take a pause? I think we've come a long way here, and it's going to need some more fundamental news to really sort of keep this market fueled, and maybe Thursday gives us those numbers, but until then we need to sort of mark our time and wait to see what happens. If you have questions about how Grain Hedge can help you with your own grain marketing situation, give us a call at 877-472-4607, or as always, visit us online at grainhedge.com. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at GrainHedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.